All right, today we're going to pull back the curtain on a word that's absolutely fundamental in the world of finance and accounting: materiality. This is the concept, the big idea, that lets auditors make sense of a super complex financial world.
But to really get why this one word is so important, you first have to appreciate the massive challenge an auditor is up against. From the outside looking in, it can seem like a totally impossible job.
I mean, just picture a huge company. We're talking millions, heck, maybe even billions of separate transactions in just one year. You've got sales, purchases, payroll, expenses. The list goes on and on. So how could any person, or even a whole team of people, possibly check every single one of them for accuracy, right?
Well, the simple answer is you don't. You just can't. It would be completely impossible, not to mention wildly inefficient. Instead, auditors use this really powerful concept to focus their efforts. They hunt for what's material. And that, right there, is the key that makes the entire modern audit possible.
Okay, so the best way to wrap your head around this is to think of materiality as a kind of filter. It's the tool auditors use to separate all the insignificant noise, the tiny little errors that don't really matter, from the truly significant stuff, the information that could actually change how someone thinks when they read that financial report.
So what's the official by-the-book definition? Well, an item is considered material if leaving it out or getting it wrong could actually influence the economic decisions of the people using those financial statements. So, think of an investor trying to decide whether to buy or sell a stock. That's who we're talking about.
Now, this right here is straight from our source material. It's a diagram that really breaks down the whole concept, from the big ideas all the way down to how it's used in practice. So let's walk through this step by step. So that first box you see really lays out the different facets of materiality. And what you'll notice is that it's not just one simple thing. Oh no, it's this multi-layered concept with basic principles, different levels that you apply in an audit, and a really crucial piece called qualitative materiality. And don't worry, we're definitely going to get to that in a minute. Okay, so if materiality is a filter, the big question is, how do you calibrate it? How do auditors decide what's big enough to get caught in the mesh and what's small enough to just pass right through? Well, this whole calibration process comes down to professional judgment and two key things: the amount and the nature of the issue. So on one side, you have the quantitative part. That's just the raw number, the size of the error in dollars and cents. Are we talking about a $10 mistake or a $10 million mistake? But then on the other, much more interesting side, you've got the qualitative aspect. And this is all about the nature of the error. Why did it happen? What's the story behind it? And this quote just hits the nail on the head. Think about it. A small error that's tied to fraud is almost always more material than a huge error that was just a simple, honest mistake. So yeah, a $1 million rounding error is a problem for sure. But a tiny $1,000 error that was deliberately created to hide fraud? Whoa, that is a whole different ballgame. That little error points to a massive systemic problem, and that makes it highly material. The intent behind it changes everything. And look, this isn't just guesswork. This is a real process that auditors follow. It's called professional judgment. They take the amount, the quantitative part, then they evaluate the nature, the qualitative part, and then they mix all that together with their professional experience and a very healthy dose of skepticism. And that's how they land on the final materiality level for an audit. All right, so the filter is calibrated. Now what? How is it actually used? Well, the answer is pretty simple. It's used at every single stage of the audit. You can kind of see the whole journey on this timeline. First, in the planning phase, materiality is what sets the entire scope of the audit. It tells you how wide to cast your net. Then, during execution, it tells you exactly which items to test and how much evidence you need to gather. And finally, when you get to the reporting stage, any errors you found get measured against that materiality level to help form the final audit opinion. And if we look a little closer at the specific procedures, you can really see just how central this whole concept is. It's tied directly to audit risk. It guides pretty much all of the work. And what's really important to remember is that it isn't set in stone. If new information comes up during the audit, that materiality level can actually be revised. And of course, every single one of these decisions has to be documented. All right, so as we start to wrap this up, let's bring it all back to the main point. What is the ultimate goal of all of this? In one word, focus. This is probably the most important takeaway. Materiality is not a license to just ignore errors. It's not a free pass. It's a disciplined, professional tool for focusing an auditor's attention where it matters most, on the areas with the biggest risk, the spots where an error could actually mislead someone and break that fundamental trust in the financial statements.
Because really, at the end of the day, it all boils down to one goal: providing a reliable opinion on the financial statements. And that opinion isn't about perfection. It's about whether they're presented fairly in all material respects. That's the key phrase. Materiality is what makes that goal achievable, making sure the final opinion is both efficient and effective.
And that leaves me with one last question for you to think about. We've spent this time talking about how auditors think, but I want you to put yourself in their shoes. If it were your own money on the line, what kind of error, no matter how small it seemed in dollars and cents, would always be material to you? Something to think about.